Welcome to Pinvest.TV, India's first real estate channel. Let's dive into latest property news from international market. China has announced new measures aimed at supporting its property sector and hinted at the possibility of increased government borrowing to stabilize the economy. Finance Minister Lan Furen revealed that local governments will be permitted to use special bonds to purchase unsold homes, although no specific financial amount was provided. Additionally, Lan suggested that more sovereign bonds could be issued and efforts would be made to reduce the debt burden of local governments, indicating that a budget revision might be on the horizon in the coming weeks. The central government has significant room to increase borrowing and raise the deficit, Lan said, though he didn't offer a clear timeline for these actions. While details of the fiscal stimulus were sparse, these announcements align with expectations from economists regarding efforts to address the property sector's crisis and ease local government debt challenges. China also plans to issue special sovereign notes to bolster capital at its state-owned banks, which should increase lending to stimulate the economy. Vice Premier He Lifeng, during his visit to several cities in northwestern China, described the property market as a critical indicator of the Chinese economy. He urged officials to prioritize the timely delivery of housing projects and stabilize the market. According to Bruce Pang, chief economist for Greater China at Jones Lang LaSalle Incorporated, these fiscal supports, aimed at alleviating local debt risks, reinforcing state banks, and aiding the property sector, are in line with what markets and investors were expecting. Despite these announcements, China's sovereign bonds showed little movement, with the 10-year government bond yield remaining relatively stable. Some economists, like Pang, expect more detailed fiscal stimulus plans to emerge after a forthcoming meeting of top lawmakers, possibly including the issuance of additional treasury debt and a mid-year budget revision. The Standing Committee of the National People's Congress is expected to convene soon and may approve additional sovereign debt and raise the budget deficit ratio, which last October was increased to around 3.8% of GDP. Zhao Pengxing, a senior strategist at ANZ Bank, anticipates that 1 trillion yuan in ultra-long treasury bonds and 1 trillion yuan in local bonds could be announced soon. Economists and investors surveyed ahead of the briefing had anticipated up to 2 trillion yuan in new fiscal stimulus. The government also plans to broaden the range of sectors eligible for funding from the issuance of special local bonds. Ding Shuang, chief economist for Greater China at Standard Chartered, noted that this expansion is significant, as it could unlock up to 1 trillion yuan of idle cash to flow through the economy. While the market may not be focused on bond usage expansion, some observers believe the briefing exceeded expectations for those familiar with the workings of the Chinese government. We value your input. Your feedback shapes our content. Thanks for watching Pinvest TV.